After the biggest liquidation event in cryptocurrency history, the next 48 hours are going to be critical to the future direction of the market. In this video, I want to break down exactly what we need to be paying attention to and what needs to happen Monday for essentially this market to fully recover. Guys, still not in the actual office yet, but at least I'm inside now, so let's jump right into it. I want to start off and say that the last 48 hours have been absolutely insane. The biggest liquidation event in cryptocurrency history. Now, I want to break down exactly what happened, but more importantly, what we're going to find out tomorrow in terms of what comes next. So I made a video yesterday saying that the majority of the reason we saw the crash the way we did was essentially because there's a new way that big institutions and hedge funds essentially trade the market. And I wouldn't say it's necessarily new, but it's clearly becoming more of a thing. What they do is they have bots that scrape headlines. Those headlines essentially will determine how those bots react. What we saw is clearly a lot of financial institutions essentially had an algorithm saying that if the word tariffs are mentioned by President Trump, sell off risk assets. And that's exactly what we saw. The second President Trump announced tariffs on China, we're going to get more into that, the whole market dumped off. Now, I made another video talking about how cryptocurrencies are really bullish for tariffs. Tariffs prove that the entire world is moving to a more separated and segmented trade relationship, and having neutral, decentralized liquidity is critical for that world we're heading into. So the idea that cryptocurrencies would even sell off on news of something like tariffs already makes no sense. So what you're seeing is clearly this is more of an algorithmic repositioning in terms of how exposed to risk institutions want to be. Tariffs came out, institutions said tariffs are bearish, and then they said, okay, let's sell off anything that we determine to be a risk asset. Now, the interesting thing about these bots is they just make a decision or make an action based off of whatever the headline is, but it's not actually parsing the news, or there's a lot of times not a human behind it. And because of this, right, what we saw was a huge V bottom. All these bots came in, all these algorithms were activated, they sold off the market, and then what the smart people did was they said, okay, perfect, you're going to sell off positions with absolutely no fundamental analysis behind why you're selling off that position, we'll scoop it back up. And that's why you saw the big V bottom that we saw and why the market recovered so quickly. Now, another reason why the market is now recovering further is because Trump came out and essentially said, hey, by the way, this was more of a threat than anything real. We're not actually putting tariffs on China, but if they do X, Y, and Z, then we might put tariffs on China. So now you have the market completely caught off sides because it was trading on a headline that might not have even really been real. The market sold off all these assets, right, saying, okay, there's tariffs coming, and then essentially got a complete head fake, and now suddenly tariffs aren't coming. So tomorrow is going to be super interesting. If we see the market open up and there's no further escalation in tariff news, guess what? I think the market is going to make a big move higher, much bigger than what we've seen today. And that's because all of these traders are now going to be back into the office. All these institutions are going to be back at work, and they're going to be sitting there and saying, wait, why did we just readjust our entire portfolio based off something that looks like isn't even going to happen? So it's nothing more than a huge head fake. And if we see that there's no escalation Monday, I have a feeling you're going to see these asset prices bid right back up because everyone's going to say, okay, well, we messed up. This isn't happening. It was a false flag. So now we have to reposition ourselves back to where we were before prior to this entire event taking place. So we're going to have to see what happens tomorrow in relation to, is there going to be an escalation? Is there going to be a walk back? What is the end result going to be? But the most important thing you need to take away from this is how irrational this decision-making process really is by these people with very large amounts of money. They're not actually considering how any given catalyst could impact the market, right? They just are looking at things with a very broad scope. They are saying this is a risk asset, we're selling it off if something scary happens, and if something really good happens, then we're buying this asset. But they're not actually looking at the fundamentals. They're not actually thinking about, okay, well, tariffs are actually probably pretty good for cryptocurrencies, so we're not going to sell these off if tariffs are the announcement. If something like, oh, Binance just imploded or Michael Saylor just went under, those things, right? That would make sense to sell off the cryptocurrencies. But they're doing a very broad and very unsophisticated analysis of, hey, let's get rid of what we deem risky assets, and then let's load up on things that aren't risky. I think on Friday, AT&T was actually up. I guarantee you some people had a beat on some of this news. The market was already selling off Friday. And it's just the most basic, hey, out of risky assets and into things that they deem riskless. And the next 48 hours is going to tell us how real this move really was, or how much of this was really just a big mistake by people who are essentially relying on these algorithms to trade for them. This is one of the first things I called out when this liquidation event happened. It was so obvious. When you have a catalyst like tariffs and it takes the market down the way it did, it's just so clear that one, obviously there's a lot of leverage in the system. A lot of people got liquidated. This is what made it probably a lot more dramatic than it would have been otherwise. But it could not be more clear that there was a single event that didn't have any material impact on financials of companies, didn't have any material effect on the economy, didn't have any material effect on anything. It was nothing more than one person's words and the entire market melting down. And these are the kinds of things you have to look at and say, okay, is this a rational decision the market is making right now? Or is the market acting irrational? Because if you can digest the news and say, okay, this is likely an irrational move, there's nothing happening negative for the fundamentals for cryptocurrency. In fact, maybe this catalyst is actually positive. And all these institutions seem to be just unloading at once. Leverage flushed out of the system. Then you take a look at the other side of things. The ETFs are still going to go forward. We're still getting cryptocurrency clarity. We're still getting more deal flow than we've ever seen in cryptocurrency history. So if you have all these positive catalysts adding up, and the market is just ignoring those, and just hyper-focusing on this one thing that doesn't make any sense, that is usually a clear indication that a lot of people are getting it wrong. And if a lot of people are getting it wrong, you can get it right, go against it, and that's how a lot of money can clearly be made. We're going to continue to see this in the market, because as institutions step into cryptocurrencies, they are going to treat this as a risk-on asset class, right? And that means you're going to continue to likely have events like this if something happens, if a headline comes out, and that headline triggers these algorithms to start selling off risk-on assets. Now, eventually the asset class will mature past this risk-on stage, but clearly these financial institutions, while dipping their toe in the cryptocurrency industry, are still very, very hesitant to hold on to these things through any kind of downturn in the market. Now, the really bad news for them is it doesn't really seem to matter. If you look at the rebound on how quickly these assets came back up, there's a huge amount of buy demand. A lot of people are saying, okay, give us cheap crypto, we'll take it. And it's just being sucked right off the exchanges as soon as they dump it. So it doesn't look like to me that this is any kind of start of a bear market like a lot of people are saying. It looks like one big, crazy, fundamentally driven news catalyst that caused a cascade of liquidations. And the reaction today, and what we'll be really telling is the reaction tomorrow, is going to confirm this. If things like XRP and Bitcoin finish up 5 to 10% tomorrow, it's going to be a event that we all look back at and say, hey, that was crazy, and now it's completely behind us. If the market continues to sell down, if there's continued trade escalations, if this looks like something that's going to be longer term, then we might have to reconsider some of this and say, you know what, maybe this irrational behavior by these institutions, while maybe irrational, could keep going if they continue to act in this manner, right? The market won't act irrational forever, but if we keep on hearing about tariffs and institutions are continuing to panic and continuing to sell off these assets, they can create a lot of selling pressure, and that can continue on. Eventually, it's just really hard to see how the positive fundamental catalyst wouldn't completely outweigh this, because anyone who actually understands what's going on here knows that it really doesn't matter how many tariffs are put out there. It has absolutely no impact, one, on company earnings, two, on the United States GDP, three, on cryptocurrencies, right? These tariffs have impacted nothing. But for whatever reason, there's a huge freak out whenever anyone talks about tariffs, and that could continue if it continues to be a big headline. Personally, I don't think it's going to be. I think Trump wants the stock market up. I think he doesn't want to deal with people freaking out and tariffs being the main media headline, I think they're going to continue to be used as what they've been used as this entire time. Nothing more than a threat, right? All it is saying, hey, we're going to do this. And then people say, okay, well, please don't do that. We're going to go do whatever you want on the economic side. And that's been working up until now. So I don't think this is going to continue to be an issue. I think this is a one-time event. A lot of people were caught off sides with too much leverage. Those people got liquidated. And now I think it's just back to normal. This is what happened the last time tariffs were a big thing in the media, a big thing in the news headlines. And guess what? 2 months later, everything was higher than it was before. I think this is going to be the same exact thing. I can't believe people are falling for it twice in a row, but that's just the way things are sometimes. Guys, thank you so much for coming. We'll see what happens tomorrow. And for now, Mickle out.